You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the OptionsInsider.com and co-hosts Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. That rockin' tune means it's time once again to rock out with us here on the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of Greeks, Delta, Gamma, Theta, Vega, a little bit of education, some strategy, some unusual activity, throw in maybe some call put parity, some synthetics, all the fun stuff that makes up the world of options. And you have indeed the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the old OIRN, the Options Insider Radio Network, beaming to you live, or should I say live to tape, live to us anywhere here on the old show. We're working on making it live for you guys as well, so you can listen as we record, as we make the sausage, as they say here. But right now, live to tape for you guys, of course, from the old Options Insider Studios here in the options capital of the world, Chicago, IL. And, of course, we produce a lot of fine programming here on the old network and in the old studios, and the best place for you guys to find all of that fun stuff. As well as, of course, we do a lot of great written stuff, too. Up there on the website, theoptionsinsider.com. You can find all of that great content there. And, of course, if you want to mainline the radio, iTunes, TuneIn, Stitcher, etc., just grab the old app. Available for most major platforms. Like I said, I know a lot of you have written in recently saying, hey, what about them their push notifications on the Android and the iOS? And don't worry, they're coming. I think I have the latest I have from the developer is by the end of the month. So hopefully you'll be seeing those things really, really soon. And joining me on the old program is the usual cast of characters, starting off with the man who is knee-deep in the process of building his own ice rink, whatever that process may be. I'm not familiar with it, nor do I ever hope to be, but he is the Rock Lobster himself, Mr. Andrew Giovinazzi from the hinterlands of Maine by way of the old OptionPit.com. Mr. Rock Lobster, welcome to the program, sir.
And how are you doing? I'm good.
So you're straight out of lobster season and you're straight into ice skate rink building season.
Yes, it's waiting for excavator season. It's not, I'm a little bit dismayed right now. My guy's bumming me out. Needs to get over here.
You got two very distinct seasons, it sounds like, over there in Maine. Kind of like Chicago. You got summer and construction season. But that said, we also turn our attention to a little bit closer to home, out in the hinterlands of Chicago, a little sleepy hamlet known as St. Charles, Illinois, where we welcome in the one, the only, Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here, broadcasting live from the hinterlands, or yet the close hinterlands of beautiful, sunny, scenic St. Charles, Illinois.
And Uncle Mike, you might be able to tell, is en route out there in the hinterland, so Skype will hopefully treat him nicely as we move on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what's moving, what's shaking, what's rocking, what's rolling in the world of options and indeed the broad markets. And it was a lot of rocking and mostly rolling to the downside today. most of the major indices, all of them, in fact, just shedding some weight, some excess weight, some dead weight, if you will, on the day. The S&P dropping down quite a bit, closing right near the lows of the day at 2047 or so today, off nearly 30 handles on the day, or about 1.3%. The Dow a little farther south from a percentage point perspective. Try saying that 5 times fast. Listeners off about 1.4% or nearly 250 handles. The Q's off about 1% or so. And of course, all this downside leading to a little bit of volatility love, a little bit of an inhale in the old VIX balloon. A VIX cash crossing the 18 handle for the first time in a little while here, up a little over 2 handles today on the day. So clearly, the Fed weighing on the minds of everyone out there in the marketplace. Once again, unfortunately, listeners, we are back into the will they, won't they. Sounds more like the will they now debate, dance, call it what you will, over there with the Fed. We had our brief flirtation, our brief moment of joy where we could focus on things domestic and things we can wrap our heads around, like earnings and things like that. But now we're back to the ephemeral nonsense that is the Fed dance. So hopefully this thing will shake itself out before too long. We can get back on to the business of the market at hand. But speaking of that business, there are indeed some names reporting after the bell today, including, I hate to say it because I know Uncle Mike, who is driving, may indeed crash into something, but his favorite name / nemesis, good old Cisco Systems, reporting after the bell today. They closed right around nearly $28, and that Straddle pricing in about nearly $1.50, so it's about 5%. And we'll see. Looks like it's off a little bit in the after hours. Now we'll see how that number shakes out. And speaking of Uncle Mike, Cisco trauma aside, what caught your eye in today's marketplace, sir?
Well, I think overall in the marketplace, what happened is that there's a lot of, it's like you said, there's a lot of fear of the Fed doing what they're may or may not do. And we had good news at the unemployment reports or non-farm on Friday, and now they think that they're going to raise rates again. I was watching CNBC today and just looking at the fear in a lot of the analysts' eyes in terms of, well, I don't know if we really need a rate hike right now. And, let's just do it and be done with it. I'm the world's biggest bull, as everybody knows, but let's just get it done with. I'm with you, Mark. I'm sick of talking about the Fed.
I guess selfishly, from a content producer's perspective, I should like the Fed because they've caused a lot of content and a lot of discussion over the past few months. But I also like an orderly market, and they are creating anything but these days. So if they're going to do it, I won't use the crude metaphors out there, but just do it. And so we can all indeed move on with our lives, like building a nice ice rink up there in the hinterlands. In addition to waiting for the excavator, which apparently is a difficult thing to get out there in the hinterlands, Mr. Rock Lobster, what else caught your eye in today's activity?
It's just getting our excavator, I guess. Well, this is the time everybody's trying to jam this last stuff into the end of the season, before the snow and everything freezes.
So he's a very popular excavator man then. His dance card is full, you're saying?
Yes, the dance card is full. But I have backup. I do have some pawns. Anyway, how about the move in the VIX futures? This was the day where everybody all of a sudden decided to become collectively worried about Yellen.
It is kind of weird how that happens, isn't it? Just like one day, everyone decides today's the day. It happens like that all the time.
And it's usually, I have like the rule of 3 for volatility. You need 3 things to really kind of freak people out. Oil prices are sliding back to 40 again. So that pulls down 10% of the market right there. So already the day starts off south. Most of the day, actually the Qs were up on the day for a while. All the big cap technology, which is actually still generating tons of money. All those stocks kind of blew away all their earnings and stuff like that. So that was those held the market up for quite a bit. And then kind of by the end of the day, just everybody started to sell everything because they were worried and da-da-da-da-da. So we haven't got the third leg of the vol triangle yet to really make volatility go jump. But that certainly could happen. And it could happen, relatively easily, like it always does. But tomorrow, no real news, no real changes. I know that Yellen spoke this morning. Gosh knows what she said. But today's the first day where we actually had, VIX has basically been pricing a bit of a sell-off for the last for the last week or so. It's constantly been bid, no matter whether we rallied or not. And, you finally get a little bit of a sell-off. We took we went back to the unchanged for the year again. We're close to it, I think. And that's where we stand. It's just going to be a year where they're going to try, but they're not going to be able to generate any positive numbers out of the S&P 500, it looks like. So, and I think that's what we got.
Yeah, I'm looking at the futures chain now, and they put some life into that near portion of the curve there.
They did.
To put it mildly, and up $1.80 in the near term future. Again, that's a pretty close product there, so you got to look a little bit farther out. But even a few months out, over $1 going out in the Feb 2016 future. So, we kind of marveled, I believe it was last week, on how they had collectively kind of seemed to bid it up a little bit, and then they just came out and just crushed it across the board last week. And now this week, apparently, they're back in the bid it all up across all term structures mode.
Right.
Which I love the vagaries of the volatility market sometimes. It's kind of just, you have to shake your head at it sometimes.
And what I think is real important is the November future is still above the cash, meaning there's 3 days to go, and there's no backwardation in that future. So the market's closing with an expectation of higher vol tomorrow. So we'll see if we get it.
Yeah, that no future going out about 1860, the cash hovering around 1830 or so, so about a 30 cent or so differential, 33. Let me say that again. About a third of a point differential or so there in the old marketplace. We'll see how that shakes out. Speaking of shaking out, we got the Cisco playing out a little bit now. Looks like it's off about 3/4 or so of a point, which it was pricing in roughly double that in the straddle, about $1.50 or so about 5%, getting about a 2.5% move in the after hours. Seemingly, at least in the initial blush, keeping in line with kind of the narrative we've seen a lot out of earnings season so far this year, of a lot of names, aside from a few big ones like the Amazons and the Googles and the Microsofts and what have you. A lot of names in the tech space particularly, but a lot of names in general seemingly underwhelming from an earnings perspective this year. I mean, I haven't done all the math on it yet. I'm sure, outliers aside, it seems like premium sellers probably are winning so far going into the tail end here of earnings season. Uncle Mike, I know Cisco is kind of a rough patch for you. Have you ever thought about getting back in just to make bygones be bygones and try to fight back against the PTSD you have now, according to Cisco?
Yeah, revenge trading. That's a sure way to make some money, right?
Always works for me.
It always works for you. That's good. No, I just, the only reason I even look at the thing now is just because I know that you're going to hammer me whenever it comes up around earnings season. But just to kind of add to what you were saying, it's definitely been the case. It's been the case with Apple. I was just kind of glancing at that when they went over earnings, and no doubt about it, it's been, as Longo would put it, a resounding meh.
Yeah, pretty resounding in the meh category so far this season, which, again, if you're an aggressive premium seller, so a few of those blowout names notwithstanding, you're looking at some interesting stuff, getting a lot of attention, I'm sure, on the short premium side of the fence this season. Speaking of some attention on the short side of the fence, good old Mary Jo White over there at the SEC saying short selling starting to get her very, very intense attention. And whenever you see a regulator saying stuff like that, it kind of causes some interesting developments. Of course, this is kind of coming on the heels of some developments we touched on a little bit on the show. We mostly touch on the options side as a result of all this short selling going on in names like Valiant and others. And we saw the short squeeze out there in the Weight Watchers as a result of Oprah, et cetera, et cetera. So short selling's been on the minds of a lot of people of late. And there's a lot of people are starting to point out, wait a minute, some of the regulatory requirements and disclosure requirements for some of these big funds and others, they have to disclose their big long positions. The short positions, for whatever reason, not so much. So that's kind of a bit of a loophole that it seems like the SEC is looking to close. And I bring this up for a couple of reasons, not just because we have a lot of people who like to sell things on listening to this show, including selling premium, but that wouldn't really be impacted by this. But more interestingly, whenever the SEC starts to go after short selling, they have a bit of a, shall we say, a dubious track record of executing that, most infamously back in the wake of the '08 meltdown, where they infamously banned short selling. Very short-sighted indeed of them. And that, of course, had a lot of interesting ramifications for the options market, because where do people turn when they can't sell stock? Guess what? They buy puts. And so the options market was rocking and rolling for a few days there as a result of that. Some market makers I know were still in the game still call that some of the best, one of the best months they ever had in the business. So maybe they want that to happen again. I don't know. But still, this brings up some dangerous, some dubious memories. Mr. Rock Lobster, does this make you concerned we might go down the road of either banning short selling or some other perhaps short-sighted regulation that'll have all sorts of unintended consequences for us here in the little old forgotten derivatives market?
The more they try to manage these things from on high, it seems like the worse they do. So there's a point where I wish they'd just kind of stay out of, just let the market kind of trade and see where it goes. But I don't know. I prefer them to do less instead of trying to do more, because every time they do more, it seems to end up with less.
It's funny, I forgot where we pulled this one particular article we're looking at here in the show notes from, but they even end, this is from Bloomberg, they even end their article with, in addition to short selling, investors have other means, including using derivatives to bet against the stock. So even Bloomberg implying there at the end that if they're going to get around to short selling, chances are they're going to get around to looking at something that involves the options as well. So stay tuned for that, listeners, because that's just what you needed, more regulation coming in and cramping down on the way you like to trade your products. Hopefully we're being alarmist. Maybe it's just, one of those things, trick me once or fool me once, shame on me. Shame on you, fool me twice. Definitely shame on me. I've been a little bit burned in this space in the past, so by bad regulation. So perhaps I'm a little bit gun shy, but when I see cracking down on short selling, it gets me all sorts of worried. But now it's time for us listeners to keep on rolling, get away from the worry, get into some of the dubious activity. It's time to dive into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where you may want to hide the more sensitive of your loved ones and get the children away from the microphone, because we're going to take a deep dive into all of the spooky, the scary, the downright dubious activity that is lighting up the options tape today. Going to kick things off, as I am wont to do, in the land of relatively straightforward symbols. In this case, we're going over to the realm of U.S. Steel, ticker symbol X. I like that. Very simple, very straightforward. Nothing really to do with steel, just X. I kind of like that. It implies, I'm not sure what it implies, but it's nice, simple, straightforward, and we salute that here by including them on the Odd Block. Unless, of course, this is a dubious honor, in which case, don't hold it against us. But X, a good old X, name south of the 10 handle these days, at $9.68 to be precise. Today, if you've been following the saga of this name over the past year or so, hasn't exactly been a good one. They were trading, about three and a half times this level about a year ago, and now fast forward and they're south of the 10 handle. Still is the name that does some volume from an options perspective. They've been averaging about 36,000 or so contracts a day, doing over 50,000 today, 51,000 to be precise. So decent paper in them there. X in particular, it was the old X Nov 10 puts. I'm going to say X all day, Andrew, so just get prepared for it now. These old X Nov 10 puts were lighting it up today to the tune of, when we first started watching them, one block of about 5,200 going up on the old Philly for 67 cents. Looks like paper selling. Looks like other strikes also lighting it up out here in Nov today. 6,000 of the Nov 9.5 puts also going up today. Open interest on both those strikes pretty sizable. 20,000 on the Nov 10 puts, about 7,600 on the Nov 9.5 puts. Also about 5,000 of the 10.5 calls, also about 5,600 contracts open interest out there. And it seems like, at least in the early blush, there was some rolling, some paper out to Dees as well. In particular, it looks like the Dees 10 puts lighten it up about 5,000 times, and about 1,700 of the Dees 7 puts, again, on 1,700 contracts open there. So that, indeed, the 7 puts could indeed be more closing as well. Either way, some interesting stuff. So it could be perhaps our friend rolling some out of Nove into Dees, although the D7 puts looks like they may be closing unless he's just opening again on the exact same amount. Would be interesting. Either way, a lot of paper lighting it up here in good old X, and a little bit of head scratching paper over there as well. Either way, Mr. Rock Lobster, what's your take on all this just slew of paper here in X?
The all I could say is it looks like they are trying to maybe potentially roll some puts, or they're close some puts, getting out of their Nove 10 puts and into something a little farther. It wasn't clear that it was a rolo by the way it worked, because I saw them, they sold a bunch of them in November, and then there was some rolling out to Dees. So, but not exactly, but for whatever reason they were taking today, and it looks like they were trying to book some profits. You got your ugly day, you own some puts, you should take them,
Can't argue with that. What's that you guys like to say at the pit? If you have a hedge, it only counts as a hedge if you use it, if you sell it.
If you gotta take the money on it, or it's what the heck's the use?
So our friend here, perhaps finding the use for his hedge. I will be curious to see if these D7s, if those are opening or closing. I have the feeling those may be closing. In which case, maybe he's just giving up the ghost entirely. That is certainly possible. Or he could be rolling out to Dees here. Either way, the long put strategy, if you look at a chart here of good old X listeners, hasn't been a bad one out here of late, even post earnings. They were trading in earnings just about a little over a week ago, north of the 13 handle, 13.5. This thing's given up about $4 since then. So long puts has been the order of the day out here of late. And our friend here, if you put him on recently, is indeed probably taking some profits. And maybe he had him on in both Nove and Dees, and he decided discretion, the better part of valor, taking his money and running. Hard to argue with that either way. Looks like this has been a pretty decent win. It's no Men's Warehouse money, Mr. Rock Lobster, but still a pretty decent one. 'Cause he didn't do the stock leg. That's where the money is, sir.
Exactly. Well, there aren't many dollars like those Men's Warehouse dollars. Let's just put it that way.
That was some serious dollars. It was our old bearded friend in the commercials who was putting that trade up. He's like, if you force me out of my company, I'm going to be synthetically get some puts on you, and I'm going to laugh all the way to the bank.
Without me, this company's nothing.
You had no idea he was so savvy in option synthetics, did you?
I had no idea, to be honest.
You think he's just a tailor?
Somehow.
You think he's just a hirsute tailor? But no, the man knows his synthetic puts. Better than we do, clearly, because he's the one laughing all the way to the bank. All right. Let's move on to another name we've been talking about quite a bit of late. It's kind of reemerged on our radar. I know this is one of your favorite holdings these days, Mr. Rock Lobster. Good old Softy. We've commented many times how prior to this year, maybe a year and a half ago, it was pretty much a lost decade out there in Microsoft. Really didn't do a heck of a lot. From a options earnings perspective, it was one of the most reliable premium rights in the business. You didn't get a lot for it, but because it didn't really do much, but you knew you'd collect that premium if you wrote it. So it was a great trade from that perspective. And I'd say about a year and a half ago, Mr. Rock Lobster, probably around the time of the shakeup with Bomber and bringing in the new CEO and some other product areas shaking up a little bit, we started to see some signs of life out there from an underlying perspective, from a volatility perspective, and it's turned it into a much more interesting name to watch here on the old option block program. Today, good old Softy giving up the ghost, not as much as the broad market, only off 33 cents or about 0.6% or so, getting down to about 53.30 on the day. And if you know Microsoft, they do some paper. They do over 100,000 contracts a day, 113,000 to be precise, doing a little bit more than that, doing 125,000 today, but nothing super crazy. The ratio is kind of interesting. 106,000 calls, 19,000 puts, so about nearly 6-to-1 calls over puts. A lot of call love today. That should give you some idea of where we're focusing our attention. And this time we're going a little bit farther away from home base here, going all the way out to the Feb expiration cycle, in particular the Feb 60s. Yes, 60, where our friend today decided, I guess he decided he wanted some, Andrew. So he started off with some small lots, picking up 26,000 of the Feb 60s for 47 cents in one block over there on the ARCA. As the day went on, he picked up a few more to the tune of about 2x, 52,000 total, going up on this strike on open interest of just 4,500 contracts. So I said about 125,000 contracts going up in good old softy, 50,000 of it coming in this one mega trade. So about half of a day's ADV going up in this one trade. No, we didn't see the blocks of stock like we did with good old Men's Warehouse on this one. So it looks like this is what it appears to be on the surface, a straight up get yourself some upside calls and get them in size. And again, the IV is up, no surprise, with so much going up on this strike. They're up about a dime, even though stock is selling off intraday. But you got all this buying love that's going to inflate the strike regardless. And looking at a chart here, it's kind of an interesting play here for Microsoft. This one has been rocking and rolling. And as we mentioned a few weeks back, when they came out on earnings, they were one of the first to really blow the doors off of it from an earnings volatility, earnings straddle perspective, gapping up pretty hard. And our friend here clearly saying, Mr. Rock Lobster, there's more upside to be had. Standard disclaimer, this guy could be short a lot of the stock and hedging it. But I would wager probably not. Mr. Rock Lobster, where do you fall on this call palooza, call love, call it what you will out here in good old Softy?
Yeah, I've been looking for the stock, and I haven't been able to see, when you have 50,000 contracts go up, that you would think you'd see, that's 5 million shares.
I think you see a little bit.
At a 20 delta, like 1 million shares, against, at least marked, and I didn't see it. So that doesn't mean they haven't created a short position like you said, but when you buy the 60s even in short stock, unless you have no idea what you're doing, you're looking for a pretty sizable move. And I don't know how you would ever short stock on any kind of ratio and buy the 60 calls of Microsoft if you think the thing was going up. Even if you think it's going down, you get back to where you were. And so when was the last time you saw somebody buy 50,000 calls in Microsoft that are 10% out of the money? I can't remember.
It's echoes of the go-go 90s days where you just bought, you bought
like
anything.
1993.
Yeah, any call, any bullish position in Microsoft was just a winner.
It was only a $50 billion market cap company.
Yeah, only. So yeah, interesting stuff. Yeah, I mean, we mocked our friend in Men's Warehouse. Thought that was a weird one. He actually did the stock. Our friend here today not doing that so much. Again, I wouldn't counsel it, nor would I suggest that he did that, because that would be a bit of an odd trade. But we've seen odder things. It is called the odd block after all, and it seems like listeners, our friend here has some pretty aggressive love for old Softy. Let us know what you think about this one. You think this guy is crazy? Is he overpaying? Is a 60 handle by February outside the realm of possibility? Is it a trade you like? Are you going to piggyback on it? Maybe buy some at the money, sell some 60s, take advantage of our friend so nicely bidding up all those 60s for you out there if you do want to take that approach. So a lot of interesting stuff there in good old Softy, and we love to hear from you guys. In fact, we'll get to some of your questions in a little bit. But before we do that, let's wrap up ye old odd block with some interesting trades out here in good old Atwood Oceanics Inc. Ticker symbol ATW. It's the name that closed today. $15.72, down about half a buck or a little over 3% on the day. It's the name that does a whopping 586 contracts. So this is one of our typical odd block candidates. You don't always talk about Softy and the big names. This one today doing just a hair under 5,000 contracts. So lighten it up from a volume perspective out here in good old ATW. And of that 5,000 or nearly 5,000, just about 4,600 going up in this one sizable print here at the D's 15 strike. In particular, it was a D's 15 puts. Started going up, actually, 3,500 of them for about prices Paper selling between 75 and 86 cents, a total of 4,570 going up on the strike on the day there. This is someone coming out and just aggressively whacking away at these puts, hitting the bid, or maybe sometimes just dangling it out there a little bit over the bid, waiting for somebody to snatch it up. And looking at the open interest, only 1,200 contracts open, so clearly some opening paper. Looking at a chart here of good old ATW, it is an interesting play. This name has been selling off fairly aggressively over the past year as well, trading as high as about $35 back in the middle of the year, back in the May to June time frame or so. Of course, has given up more than 50% of that since then. So our friend here could be saying, you know what, this far, no farther. I'm drawing my line in the sand here. I want to pick up this stock for somewhere around the 14 handle. I don't mind doing it, and doing it for some size. And if that's the case, if he is indeed bullish on this name, kind of hard to argue, would be a decent level compared to certainly where it's been trading of late. Unless, of course, you think this slide is continuing, in which case you may want to trade with our friend out here. Maybe you already have. Mr. Rock Lobster, take us home on this put-selling palooza out here in Atwood Oceanics.
All of these names actually confound a little bit because all these drillers, it's I know they have a backlog and things like this, but I guess deep sea looking for oil is going to be a business of the past because all of these stocks are at massive discounts to just about everything. Like nothing's ever going to, I guess just the price of oil is going to just keep going to zero. And then the climate change people won't have to worry about it because nobody's going to want to try to pull it out of the ground anymore. It feels like that with this group of companies. So this one in particular, I just think there is a line in the sand. And okay, I'll just take the stock at this level. I'm going to keep writing these puts. They wrote them all day. Even with the stock going down, they kept selling them. They started selling them at 76 cents, sold them up to 86 cents. And, and even on a pretty ugly day for everything oil related, they kept selling them. I mean, so what are you going to do? They're going to keep selling these puts. At least that's how the paper looked on all the early part of the day. Once things kind of turned around and ATW started going south, they kind of slowed down on the put selling barrage. But I just assume they want to own themselves some Atwood Oceanics.
And then surprise, surprise, he blasted out 500,000 shares at around $10, right? Or $15. Just in keeping with our everyone doing things with stock theme these days.
Exactly.
That would be a great trade. I would certainly want to be a part of that one. And if you can't tell, listeners, I am mocking again, which means, of course, that trade would indeed print a ton of money. All right, yeah, if you're not familiar with it, as Andrew said, this is indeed a global offshore drilling contractor out there on the bleeding edge of the oil exploration space. And if you've been paying attention to that space at all, it's been a bleeding edge in many ways, including bleeding profits and everything else out there. So it's been a rough road to hoe. Our friend here saying, you know what, the 14 handle or so sounds like a decent place to scoop up myself some ATW and putting his money where his mouth is. We'll keep an eye on this one, listeners, as we roll on into our next segment. It's Thursday. That means it's time for you guys to join us here on the old All-Star panel and time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, this is indeed the portion of the show where you guys get to join us here, find us, reach out to us. No shortage of ways to do just that. At Options on Twitter, The Options Insider on Facebook, Options Insider on StockTwits. Questions at The Options Insider for those of you who like to use the old-fashioned method of email or to surf on over to the website. You can post a comment there or indeed use our website feedback form. A lot of you guys like to do that as well. And if that's all too much for you to keep track of, just grab our mobile app. Most of that is baked in there as well. All right, let's kick things off. Mr. Rock Lobster, we got a lot of time for some mail today, which is kind of nice. I like to squeeze in the listeners whenever we get a chance to get a good mail palooza in every now and then. Let's kick things off with the perhaps appropriately named, even though I think it's kind of harsh, Options Dummy. You never know. No one's a dummy. Everyone has to learn somewhere. Everyone has to start somewhere. So don't be so hard on yourself, Mr. or Mrs. Options Dummy. And he writes, hey, are there any additional nuances with a name reporting earnings on Expiration Friday? It's an interesting question, Mr. Rocklaw. I don't think we've ever received anything like this before. We've talked many times about, the many nuances of expiration, how, things are going to settlement, and so decay is coming out, et cetera, that gamma is kicking in at a near exponential rate, and all the other fun things that go on an Expiration Friday, and that's indeed every Friday now because we have weeklies joining the party these days, so every Friday is a day of fun and all sorts of crazy risk. But that said, we talked about earnings as well, and kind of how earnings are a little bit of a different beast, where you have the decay coming out, going into the expiration day. On earnings day, of course, you have that volatility balloon filling up with that implied volatility, offsetting a lot of that decay. And so, if you did have in this proverbial scenario that our friend puts forth of a name reporting on Expiration Friday, I'm trying to think of a name that's done that in recent memory. It might be an interesting example. I can't recall one off the top of my head. But you have those two kind of contracting and contrasting forces there, Mr. Rock Lobster, of the vol coming in, even as it's also going out for the expirations. I think what he's getting at there is kind of who wins that dance. And, it's an interesting idea, interesting subject. I'm trying to think back to my days when I was out more in the equity options and how we deal with some of these names that would typically not so much have earnings on expiration, but would sometimes have events going on after the close with Microsoft or Intel. Maybe they'd have a conference call or something else like that, something that would be poised to influence potentially the name in the after hours. And so if you have something like that, then clearly you're not going to be a little bit more reticent with what you do. And sometimes you may leave a few legs open you may otherwise close, even though I would traditionally mostly close things out going into expiration. That was just kind of my policy. But we would also, and a lot of people may forget this, particularly in the equity options, there's that automatic exercise threshold, which has shrunk. It used to be a nickel or more. Now it's a penny in the money. Your contracts are automatically exercised for you. But you do have a little bit of window there, a few hours after the close, if you want to give some contrary directions to your broker, who then will apply it or send it over to the clearinghouse. So in this case, maybe, for example, let's say XYZ goes out at $20, and you maybe have some residual 21 calls sitting on your books that are going to go out worthless, and that's how they're marked at the end of the day. But then some news comes out, there's an earnings event or a conference call, and XYZ gaps up to $25. Now those 21 calls and all the other strikes above it that were now worthless are suddenly worth something. But guess what? They went out worthless on your books, on your sheets. So you have to actually contact your broker and say, you know what, I actually want to exercise these because I wouldn't mind buying the stock $3 or $4 below where it's trading right now in the after hours. So that's one of the biggest things people forget about these types of events. So they do happen on earnings sometimes. And you do have some nuance in the after hours to make some movements if you're not intent or something's happening, in the after hours that's changing where that actual settlement should be in the options. You do have options, pun intended, in those scenarios. Mr. Rock Lobster, I'm sure you traded through a few of those events in your day. What do you have to say to our friend here, the harshly named Options Dummy?
Well, the thing is, you think about it, it's just massive. You have massive gamma and massive all or nothing. So the nuance with the name reporting on earnings on Expiration Friday is it's either going to be gigantic or nothing. There's no real in between. So actually, the binary effect is in full effect. I think that's kind of a huge nuance for somebody trading the options, because you basically, there's almost, if you're right, you're super right, and if you're wrong, you're stuffed. And that's kind of it.
Yeah, it does.
You clearly could trade underlying, if you have the margin and capital underlying against the position, but if you don't, you're kind of stuck.
Yeah, getting back to when we had our friend from Nadex on the show a few weeks ago, the binaries, you're right, a very binary situation where, it depends which force is going to win out. And that's why we don't see a lot of big names doing this kind of stuff and reporting on these Expiration Friday. They know better than that usually. You're going to see some names obviously reporting on Fridays. That's just this nature of the beast. JCPenney tomorrow, for example. But other than that, not a lot of the big names we talk about don't typically do that. But still, an interesting question. Good one. Good to know you guys have some options outside the after hours. And in general, and all these kind of things, the same advice we've advocated all the time still applies. If you're going into expiration, you have any sort of questions or any sort of risk, you just close it out. That's the best way to not have to worry about any of this stuff. If you close out that stuff going into earnings and then or into the expiration, or in this case both, it doesn't matter. And then in the after hours, you can do whatever you want with the underlying or something else like that. But if you close out your residual positions, the earnings after the event won't impact you adversely or at all. All right, moving on to the $1 million question here from Mr. and Mrs. Cookie. They write, hey, what is the best online broker for stock options and the big question mark, and futures options? That's kind of the second part is where the rubber meets the road for a lot of the brokers these days. You know, I can recommend, and we know off the top of our head, quite a few brokers that are very good at handling the equity and index option side of the fence. It's a very nuanced business. A lot of them have developed a lot of expertise in that area over the years, and their prices are reasonable, and they offer good platforms, et cetera, et cetera. So those recommendations are legion. Adding on the second component, the futures options component, now you just cut that audience down considerably, down to, I would think of a handful of names off the top of my head that really do a decent job on the futures options side, in addition to doing a really good job on the kind of equity and index options. And that's kind of also what you should expect going into this. The futures options functionality, I don't care where you go, if it's a primarily equity option brokerage, is going to be second fiddle to the other stuff. They've been doing the equity options longer. They have more expertise in that, and so the functionality on futures options always a little bit less robust, it seems. But that said, we've worked a lot with Schwab OX and of course the TD Thinkorswim guys. Both of them have made substantial investments in futures and futures options in recent years. OX obviously buying Express Trade a few years ago. TD making a big push into those as well. So those are the two I would feel most comfortable recommending because they have the most robust offerings for both. If you're more concerned with the futures options side, of course, there's some big futures options and futures brokers like RJO and others who could certainly handle that for you. But then you have the opposite problem. Their equity and index options offering may be a little bit less robust. So if you're kind of looking for that combo deal, I think those two are probably some of the best. Mr. Rocklops, you got any stealth suggestions there for brokers that do both well?
Besides kind of high touch type of brokerage. We're
not talking like call the desk on Goldman kind of thing.
Yeah, right? I know. This is, both of those guys do a serviceable job. And like you said, future options are always a little, just the customer, the retail customer is kind of a new phenomenon in future options. They've been there, but, not to the extent that the retail group, we had electronic execution 20 something years ago, in equity options. So, and that's a little bit more of a new phenomenon for future options. So, both of those do a serviceable job of getting it done, and, make sure if you're new to it that you're comfortable talking to whoever their trade desk is to make sure you're doing something right. Is the hardest thing about future options is all the expirations are different. The times are different. There's a lot of delivery issues. So you have to kind of make sure you don't get yourself in a pickle with the future options as well. So you have to kind of bone up on the products a little bit.
Yeah, you're right on the futures side. The futures markets and the futures options markets, as a result, have evolved a little bit slower than the equity and index options ones. So yeah, the people haven't been beating on them as much on the platform, so a little bit less robust. That's kind of just par for the course. You have to go in kind of expecting that. But if you go in expecting that, then you won't be too surprised. And if you can get decent functionality on the other side of the fence, which we know those brokers can provide, then you're good to go. All right, so next up. I love the questions we get from you guys because you guys take us in all sorts of interesting directions. This one pretty interesting. This comes from Cspell by way of the website. He writes, I'm interested to get Options Insider's thoughts on second order Greeks. I don't recall them ever being mentioned on any of your shows before, and I think you're right, Mr. Cspell. I don't believe we've ever discussed them before. So points for you. You get a feather in your cap there. He goes on to write, I don't see too much mention about them in general, even in the hinterlands. A bit of a jab at you there, Mr. Rock Lobster. Although I have recently seen them talked about on another site, and they tout them as the holy grail, so to speak. Thanks. Interesting. You know me and holy grails, Mr. Rock Lobster. I'm a big fan of debunking those in the options market. But since he cast aspersions at your beloved hinterlands, I will give you pride of place, sir. What do you have to say to our friend here, Mr. Cspell and his holy grail second order Greeks?
Well, those are, I think he's talking about the Vanna and Voma and all of the, basically it's the curvature of gamma and it's the curvature of vega of options. There's all kinds of them, curvature of the delta. So it's how much the first order Greeks are changing. Where they're helpful, and I'm working with a client on this right now, is when you're putting on ratio positions and you're trying to create trades around skew and things like that, where understanding what option is going to be a little bit more sensitive to a change in volatility and it's going to outpace another option in the same term, well, that certainly could help how you set the position up. Do you have to understand how all that stuff works? And if you even understand what the heck I just said, you have to learn about Greeks and the second order Greeks. So it's another thing to learn. Mostly, unless you have a position of pretty decent size, where you're actually doing some direct spreading and ratio spreading. Those aren't going to make a whole lot of difference. So if you're just out there buying some calls, well, knowing what the Vanna of the option is going to necessarily change how that works. I don't know if it'll really change, mostly because you just need the underlying to go up really fast. So mostly when you're looking at the second order Greeks, I think that's when you're talking about a little more sophisticated spreading, especially ratio spreading, and doing it in, once you start doing it in pretty good size, understanding how that works will make a big difference. Most of the good platforms, let's say like LiveVol, where you see how positions mature, and some on TD, and there's Option View and stuff like that does some basically kind of extrapolating out in the future. All of that stuff is kind of implied in what they think the options might do. So those are all good. You got to know how to use them, and they really are applicable when you're talking about spreading and ratio spreading, because that's when you really want to see one option outperform versus another when it comes to changes in vol and gamma and things like that. So yes, that's a very good question. Are they the holy grail? To the extent you understand how to use them and use them in the right place, and like I said, if you're just buying calls and you want the stock to go up, might be interesting to know how much the vol is going to change, but ultimately you just want the stock to take off and make money on your calls and you sell them. So
let me guess, this is for your market making client?
Oh no, he understands all that stuff already. We have more in different clients, if you can believe that.
You have more than just the one?
Yeah.
Oh, I thought you had the one.
No, we have the one, but we have more sophisticated clients that are trying to create tools to help basically diagnose what's going on in the option market. So we help them build those tools.
I love my sophisticated clients. Always the best kind. I tease because I love. But yeah, it's funny. I've always been reticent, even on this program, to even include Rho in the discussion of the Greeks, just because it's so irrelevant these days, even though it may be changing sometime soon. So I haven't really gone beyond Rho to the second order Greeks. Our friends here obviously doing some deep research into the dark recesses of the interwebs. Well done, sir. Maybe he needs a shirt for that. It's a good question. But still, good stuff. Maybe it's time for us to start including some discussions of these exotic Greeks, not just Rho, but the other one, all the other fun stuff into the discussion, along with Delta, Gamma, Theta, Vega, and all the other fun stuff that we talk about. That's much more relevant for most of you guys out there. But still, it's good to be aware of this stuff and to keep an eye on it, even if it doesn't really impact your day-to-day all that often. Great stuff, great questions. As always, you guys always take us pretty far afield, and we love it. Get your questions in. We love to hear from you guys. But now it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. You guys know the drill. This is the portion of the show where we tell you what we're watching for the rest of this week into the weekend. We got a few names reporting tomorrow on Friday. Got JCPenney and good old Tyco kind of rounding out the, JCPenney at least rounding out the old retailers. We've also got, of course, the PPI and retail sales and consumer sentiment coming out tomorrow, and those numbers, hopefully, some people at least hoping they won't support the Fed's case to move, others maybe so hoping that they will. We'll see tomorrow when those numbers come out if that rocks the market more like we're seeing today, all this Fed fear kind of driving everything, but perhaps we'll start in the hinterlands with good old Uncle Mike Tusaw. What are you watching for the rest of the week, sir, into the old weekend?
I was laser focused on the S&P. We are technically negative on the year right now, with SPY closing around the 205 level today. So curious to see if this can be used as a means of support or continued downturn. Either way, we're prepared. But I think it's very interesting, the fact that on a day like today, on a Thursday, that it did go down to the levels with which it did. Now, the other thing with which I'll be watching is to see more, I hate to say it, but just see and hear more rumors of anything that the Fed governors may have said today or tomorrow, to see where we might go along those lines. Because sad to say, I think that's what's going to be driving the market and not my good friend Cisco.
You wish. Cisco is a market mover, baby, if ever I saw one.
There you go.
I think I need to short some revenge puts out in Cisco for you, Uncle Mike. That'll always work out well.
Always. Revenge trading, the way to go.
I love it. I love it. All right. And speaking now of revenge trading, we turn to the master of revenge trading, none other than the Rock Lobster himself, who's known to have a little bit of vengeance in his day. Mr. Rock Lobster, what's catching your eye for the rest of the week into the weekend? And don't tell me umbrage.
To see if these besides the umbrage at my excavator, I'm looking to see if these futures can hold this bid, the November future 18.6. I mean, the market moved today, no question about it. On what exactly? I guess everybody's worried about oil prices again, worried about the Fed again. Like I said, I had some of our traders that were interested, like wanting to buy some 18 puts for next week in VIX. So see if we can hold up here. So I never really like to sell the first jump in vol. I like to wait to see if we get anywhere. But we're in kind of like zone 3 now. It's definitely a little bit elevated, and the market but I think the VIX has been calling this move now for 5 straight days. Now we got it. This is I'm worried about what Yellen's going to do move with oil, and we'll see what happens after that.
All right, thank you for that, Mr. Rock Lobster, and that's going to do it for the Around the Block segment. It's also going to do it for this episode of the old Option Block. That music means it's time to go, listeners. But before we depart, before we leave you heading into the old trading weekend, let's check back in one more time with my cohorts here on the old All-Star panel. See what they have cooking up that may interest you. Starting out with you, Mr. Uncle Mike. What's coming down the pike in the land of RCM?
Hey, if you are a self-directed trader out there and you would like to have advice in terms of your trading, feel free to contact me and trade under our umbrella at either TD Ameritrade and or Interactive Brokers. With that, contact information is 312-212-3531. Or you can email me at mtosaw@rcmfs.com.
Well done, sir. Go forth and prosper. And the revenge trader extraordinaire, Mr. Rock Lobster, in addition to all your revenge puts, what else is cooking in the land of the pit?
We're going to have our next webinar on fixing broken positions. It will be in early December, and then we will have our beginning boot camp starting in January for the new year. Makes a perfect gift for your option trading loved one. There you go.
There you go. Christmas gifts for 2/8 on a 10 lot or an eighth on a 10 lot. There you go. I like it. That's a good stocking stuffer price.
It is a stocking stuffer price.
There you go. Stocking stuffer is at the pit.
Generally, our webinars end up saving people money because, I learned something I didn't know, and I would have done that, and it would have been stupid, and it would have cost me money. So we try to price them right into that happy spot, the save you money spot.
I like it. The happy spot. Well said, sir. Get your stocking stuffers over there in the land of the pit while they last. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending in all those great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.